Our next panel is going to focus on blockchain technology, which we talked about a little bit on the previous discussion. And blockchain is still in its infancy, but it has transformative potential. And this is especially in the financial sector. So settlement processes can take days in finance, and after a trade is made, capital can be tied up for a couple of days. So to fix that, Wall Street has been experimenting with blockchain technology, distributed ledgers, and various uses for them. So I'd love to welcome my panel here. I have John McEwan, CFO for Brightwell, which is a fintech company that helps global workers get paid and manage and send money. And Susan Cosgrove, who's CFO of the Depository Trust and Clearing Corporation, which has one of the most realistic blockchain projects out there today, I would say, to keep track of $11 trillion in financial transactions. So John and Susan, thanks for being here. I wanted to ask you both, just so we can get up to speed quickly on both of your industries, what are the most promising potential applications for blockchain for each of your industries, and how might it apply? So John, let's start with you.
Sure. Thanks again for having me and having us at the panel, and thanks for everyone here being here. I've been sitting over there for about 30 minutes, and I don't think anyone's taken a drink, so at least just relax. But
yeah, come on, everybody.
Yeah. So we are a we are a
don't be shy.
we are a cross-border remittance company. Basically, we work in the maritime industry, specifically in the cruise industry. So if you can imagine a worker that's working for, say, Carnival Cruise Lines, they're getting paid, they're putting it onto our platform, and our platform enables them to remit money cross borders overseas, whether it's to a bank account, whether it's to a cash payout location, or they can actually take money off the ATM. When you're talking about blockchain, it's a very powerful technology. We'll talk a little bit more about that, but it's a powerful technology when you think about the settlement process. When you're remitting money cross borders, it's very complex. You're dealing with huge amounts of transactions, and that time lag in which all the money is being sent to a bank, to overseas, that takes quite a bit of time. Blockchain, as well as cryptocurrencies, I mean, there are theories out there, and we've heard a ton of them, and we'll get into that as well, that really that entire process could be improved greatly through a blockchain technology.
The actual sending of money, so that you don't have to have your cash tied up.
That's correct.
Wow.
That's correct. And then the back-end settlement process where you're reconciling all the accounts going back and forth across seas.
Right. So this back-end is where DTCC really dwells, right, Susan? So can you tell us a little bit about what DTCC does and how blockchain is applicable?
Sure. So nice to be here. Thanks, everybody. So by way of background, DTCC has served as the primary market infrastructure for the securities industry for the past 45 years. And what we do there is we clear and settle all security transactions in the U.S., and we provide post-trade processing around the globe. And just to put that in perspective, because we're all CFOs and we love numbers, last year DTCC processed $1.6 quadrillion worth of transactions, and we custody and asset service securities issued by over 130 countries worth $57 trillion. So our mission is risk management and basically to maintain safe and sound markets, and so we don't take that lightly. Our business model is actually very conducive to achieving that mission, because we are not commercially owned. We're owned and governed by the industry. So when we think about new or nascent technology as applied in our industry, first and foremost, we have to ensure that we do no harm. So we don't take that lightly. That being said, as Annie mentioned, we actually have made quite a bit of progress in advancing a distributed ledger concept for what we call our trade information warehouse. And our trade information warehouse is an application that supports lifecycle management and asset servicing for credit derivative transactions, which approximate about $11 trillion around the world. And we've been working with IBM, Axoni, and R3 on this application for about 18 months. And about a week ago, we announced that we're going into user acceptance testing with 15 global banks. So we're really pleased with what we've seen. We've learned a lot along the way, but we're actually going to be launching this application in production in 2019.
So that's some real progress and an actual step. How long did it take to develop this, and when did you first start looking at blockchain for this particular use?
So we started looking at blockchain about 3 years ago, 3 years ago, I think for everybody it was really just kind of a theory, and for us it's actually turned into a real use. What we did is we didn't want to start with our riskiest securities clearance business, so
Probably smart. Probably smart.
Yes. Do no harm is that first and foremost.
Exactly.
So we picked an application that we needed to replatform anyway, that was had a very stable data model, and that had a finite set of banks that we work with that really wanted to do some experimentation in this space anyway. So that's how we selected the Trade Information Warehouse.
And Rick, and John, what about you? What would you say in terms of how long you've been looking at blockchain technology?
So I think that, it's been we're a fintech company here in Atlanta. You have the likes of Cabbage and all these other fintech companies here, and there's a great push to, accept these types of things. And I think that we've always looked at it, and as it relates to our users of our system, right now we're kind of looking at it with kind of an arm's distance, and it's really on kind of with our partners and how they're utilizing the technology. And when you get into kind of the nuances of blockchain and kind of all of its uses, it's really reliant on, this person, that person over there, and everyone having a piece of the blockchain, if you will. And right now, as we've discussed up here, is that you have to take your stakeholders in mind and our crew members. And really kind of think about this whole process, because at the end of the day, they want their money. They want to have the confidence that it's there. That's what we provide them. We provide that on our system that enables them to remit monies back home, and we're not going to mess that up by going haphazardly into a technology that hasn't really, been fully vetted, if you will, over time. And so we continue to look at it, we evaluate it, we absolutely see the benefits of what the technology could do, but haven't really kind of got headlong into it.
Do your crew members also see the benefits, and what kinds of things do they ask for when it comes to blockchain, if anything?
So it was funny, I was part of a SaaS company that did time and attendance, and we got this question all the time about, well, will people get away from time clocks? And you're still talking about people that, some of the people that, they can't read and write, and as it relates to our crew members, they're just thankful to have cash in their hand. We're still trying to get crew members off ATMs. And so to have the ability to put, cash in their family's hands, which is kind of what they're trying to do. They're trying to support, they're out on these cruise ships for 9-10 months on contract, and they are providing for their entire family back, whether it's in India or in Indonesia or the Philippines, and they're wanting to get money back over there. Quite frankly, they don't probably care whether it's blockchain or anything else. They just want to get their cash in their hand back over there.
The nuts and bolts aren't as important.
That's right. And so you have to understand that, because we actually provide a service that enables them to do that absent a blockchain. Now, if we get down the road and the banks in which we interact and the remittance services that we interact with start going down that route, we will absolutely adopt that. But in the meantime, we will continue to service and be an advocate for our crew members.
And I imagine that the same principle applies, that you want to do no harm, and you wouldn't want to somehow make it longer or more cumbersome in the
Correct.
process of trying to adopt blockchain technology.
Absolutely.
So how do you balance involvement with blockchain and still try to be sensitive to the bottom line of your company? If you're over here experimenting on one end, how do you make sure that you're not draining resources from the company? Susan?
So one of the biggest challenges with distributed ledger or blockchain is really the business case. We've really yet to prove that there's enough value to cover the build costs, the run costs, and the switching costs, because the value in the blockchain is building a community. That said, as CFOs, we are naturally equipped to kind of sort of drive that equilibrium between sort of promoting innovation and making sound financial decisions. So as CFOs, I think we have to be comfortable living in that gray area. But I would say that that's probably one of the biggest challenges, Annie.
Right. Because you don't want to totally wait on the sidelines, I imagine. You can't be waiting on the sidelines. But you have to calculate how you're going to be able to do this. John, what about you?
I've always believed that the CFO has a fiduciary responsibility to each of its stakeholders, whether it's investors, employees, senior leadership, and that I've always believed that the CFO is, if not next to the CEO, the leader of the organization. We're the confluence of where all information runs through, and from back end, from budgets to the forward-looking aspect of the company, and by trade, I'm a CPA and I take that very seriously. And that, we are the cornerstone of trust within our department, within the company, to our external stakeholders, to our customers, and that has to emulate. And so therefore, you have to go into each decision with a thoughtful nature on the decisions that you actually make.
And beyond this question of cost, what are the other biggest challenges of implementing blockchain for you guys? Either one. John, maybe you can start.
So when you think about a new technology and the cost in which that everything would look like, especially as it relates to a blockchain, you have to think about the whole ecosystem. And when you're thinking about a blockchain as it relates to our business, you're taking on other people into that kind of ecosystem that you don't necessarily know. And your value system has to match the value system of the person across from you. And so those are costs that you can't, sure, there's a cost, there's an IT cost, there's a compliance cost, and you get into that, and that cost begins to grow. But you don't know what the cost could be. You can't necessarily predict what the cost would be if you make the wrong decision. So therefore, you have to weigh that based off of everything else going on around you.
So it's always this careful calculation, step by step.
Correct.
Susan, what would you say?
So I would definitely say confidence, and this is something that that we're building, and it's going to take some time because we need to really get a high degree of confidence with respect to resiliency and redundancy. One of the things
is that internally or for your customers and clients?
Internally and externally,
both.
So system-wide. One of the things that I probably would have said was the biggest challenge is, if you asked me this question months ago, would be scalability. But recently we actually completed a test because the equity markets in the U.S. are so robust and there's so much volume that goes through them. We actually completed a scalability test, and we proved that the technology could actually process a little bit over 6,000 transactions per second for 5 straight hours, which is comparable to what we see in the equity markets. So that being said, that's really positive from our perspective, but it's really just a starting point. So scalability is still probably one of the concerns, I would say.
And what would be better about the way that the system is currently functioning versus implementing blockchain in the equity markets, for example?
Well, when most people think about blockchain, they think about public chains. And so one of the things that when we implement and build distributed ledger, it's in a permissioned or a private blockchain. So you have to be authorized to participate on the blockchain, and you've got a lot more control then with respect to scalability and all the things that we talked about. And so that's kind of a big thing for us.
Sure. And so for the outside world, what would you say is the most misunderstood aspect of blockchain technology? I know that that's a term that's bandied about so much. If you had to explain it to someone, what would you say?
Cryptocurrencies are the same thing as blockchain.
I think that's a great one. Yeah. They get conflated all the time.
Yeah, I mean, basically it's the technology to allow the rails, if you will. If you think about MasterCard and Visa, those are the rails. Cryptocurrencies are simply riding on the blockchain technology. It's this whole concept that you can have a stored value that you can transmit it across borders at the same stored value. And that's a whole nother conversation about the value of cryptocurrencies and what it does. We'll have to have a few more glasses of wine over that one. But yeah, the technology in and of itself is pretty powerful. I mean, you know, as we were talking about, you know, if you have a private blockchain and it's for things, you know, people talk about smart contracts and the ability to kind of move information around and speed those types of, you know, kind of internal processes up. It has a lot of value.
And could you just highlight for anyone who might not be familiar with the smart contract concept, how that differs?
Well, I'm not necessarily the true technocrat, but basically it just allows you to, if they're like for a mortgage contract, it allows you to gather parts and pieces of a contract from, you know, different people that may not be in the same location. So if you walk in and you sell your house on a mortgage or whatever, everyone knows, if you've been through that process, that it's the same whether it's here in Florida versus, or in Georgia or Florida versus California. So, you know, a technology that actually brings it all together without spending, you know, 3 hours with a attorney, then there's value added in all that. But when you're talking about, you know, millions and millions and millions of transactions going cross borders that actually relates to dollars being transmitted, and the confidence that the Filipino that's working on Carnival Cruise Lines in the middle of the Atlantic can get their money back to the Philippines, to their money habit, it's a whole other ballgame.
Yeah. Susan, what about you?
So just another comment on smart contracts. So these are contracts, which is simply terms and conditions embedded in the block. It's actually what's supposed to put lawyers out of business. So it very simply, it's an if this, then that type of kind of an analogy, which is not necessarily new, but it takes place on the blockchain, which would then, you know, sort of be a prerequisite to moving money. In terms of, I guess, the biggest misconception, I was going to say something similar, where, you know, Bitcoin does not equal blockchain or distributed ledger. But I guess what I would say is it's not a silver bullet. So, you know, we're evaluating this on a case-by-case basis. As I said, we've picked sort of a pocket of the market to start with, and it's going to be a big learning experience, and it's going to require a community to actually really achieve the value that, you know, that is expected of this technology. And the other thing that I would say is it really requires strong governance.
Yeah, and I think that that's such a smart point about blockchain not being a silver bullet. I think that we're in a cycle right now where it's applied to so many things, or its potential is touted in so many arenas, when if you step back, you say, well, why do you need to have a decentralized database for that? Like, why couldn't you just have a centralized database?
Well, I think what Susan just said is an important point.
Yeah.
It needs to be governed.
Yeah.
The whole point of blockchain and cryptocurrencies is that it's not. To me,
which is why you have this tension between the two communities.
That's right. I mean, it's crazy. I think, you know, counterintuitively, in some aspects, you know, cryptocurrencies and blockchain would be even more regulated, just because everyone wants to. We all know about the government. I mean, you got one ledger, you're sharing it with someone else. You don't. I mean, if people are naive if they don't think the government and regulatory are going to want to have a piece of that blockchain.
So I think that this is how the Wall Street comes into, like, you know, some friction with the, like, libertarian, like, crypto true believers and those two factions of of blockchain. It's just out there. Finally, in terms of the outside world, what kinds of pressures do you receive, if any, for focusing on blockchain? Is there incoming, inbound interest in what you're doing with blockchain? Susan, you want to kick that one off?
Sure. Externally, we get a lot of pressure from our clients, frankly, because they look to DTCC to be a thought leader and to kind of roll this out into the community. We can sort of deploy nodes and let banks kind of take nodes and attach into our blockchain. So we get pressure from our customers to actually take a leadership role, find a way to kind of create the sandbox and advance this. So as I said, we've been working on a distributed ledger for the trade information warehouse for 18 months now, and probably within 6 months we'll be in production. But even from there, our clients are going to be pushing us further to do more and more with that ledger, which, by the way, does incorporate smart contracts and is also in the cloud. So there's a lot going on there. But the pressure comes from our clients, actually, to move the dial.
Yeah, definitely. John?
Yeah, so we're asked all the time. I mean, our investors ask us about this. I mean, when you're in the fintech world, everyone believes that, or at least the MO is that, you're on the forefront of everything and pushing all the limits. And, sometimes you have to just take a step back and take a break and just kind of look at it from what makes sense and justify your position. I mean, it's not like we're saying that it's a bad technology or it's just so early to tell. And when you talk about the serious nature of moving money across borders and with anyone, I mean, you're going to take that seriously, and you should.
Absolutely.
That usually kind of calms them down a little bit.
Yeah. So I think Brightwell and DTCC are both great examples of how blockchain technology is having some real applications already developing. But as you can see, there are definitely some tricky considerations in the process. Thank you both so much for joining us. Thanks, guys.